My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today an old friend zooming back in from Texas, Randy Langenderfer, and I just screwed up your name.
Langenderfer, but it's all right, Dave.
There we go, Langenderfer. Just the way it's spelled, it's just got a log for you. Is here today, and Randy's been around real estate for a long time. You name it, he's kind of had a hand in it, all the way from single-family homes up into big multifamilies and developments and flips, and kind of starting to get back to the roots a little bit here. So, Randy, welcome back to the show.
David, it's a pleasure, my friend. And I don't know if it's been a couple of years or three, but too long. So I hope you're doing well as well.
Yeah, no complaints. So, Randy, give us a little snapshot of what the portfolio currently consists of and what you're focusing on primarily these days, end of 2025, in real estate.
So from a real estate perspective, I still continue to be a GP and an LP. I'm a GP in, I don't know, 3 or 4 properties that total about 800 or 900 units. Dallas, Tucson, Arizona, and Kansas City. Kansas City. So I still continue to be there. I invest in other people's deals as an LP. I've even invested some of my money in warehouse, self-storage and industrial warehouse space. And I left the corporate world 2 years ago, doing this full time now. Truly enjoying life. And, I still say I work a lot, but I work for myself versus, I call it the man, having to fill out worthless reports and stuff like that. So
yeah,
it's good.
So, Randy, we were talking a little bit off camera that, the whole world in multifamily has gone through an upheaval over the last few years. How has that affected you guys? Have you had any fallout from that?
Yeah, like you, I've been in it since about 2013, and it was just dumb money back then. You'd throw your money at a dartboard and you'd make good money. Mm-hmm. And those are the days I think we'll long for a long time to come. But rising tide lifts all ships, as you know, and they were really good through 21 and 21. I bought into a property in February of 2022, as everybody else did, a really nice Class A 60-unit building here in Houston, raised money for it, and variable rate debt. Operationally, it was going strong. It just had too much debt on it.
Yeah.
We attempted, 3-year with 2 1-year adjustable, 2 1-year extensions on it. So August of 25, it came up for the first extension, and we really tried to negotiate with the lender, did everything. I wouldn't say that they were, maybe a lend or own, but they were not willing to negotiate with us at all. And regrettably, very regrettably, we ended up giving the property back to the bank in August. And, that's a blemish, David, no matter how you look at it. But I've decided I'm not going to let it define me, and I'm still in the game, and I'm enjoying it. So what have been some of your big learnings and takeaways from that experience, Randy? Some great learning experiences. One, on the positive side, I had general partners that were just stellar. I heard of other people who general partners ran from all the tough discussions and capital raises and putting more money in it, et cetera. I had 3 very good general partners that we communicated weekly and spent a lot of time together. That's on the positive side. You don't know this going into it, but the lender there, trying to get some background on the lender. What style of lender are they? This lender was Money 360. I had not heard of them before. Our broker pointed us toward them, and they had the best rates in February of 2022. But in retrospect, their whole portfolio, they've actually gone belly up, and because they had so much variable rate debt on their balance sheet, and I've actually foreclosed on them. I mean, they have gone bankrupt is the name of the game. Oh. So the lender And then your listening audience to why we all get in multifamily is non-recourse debt. So this is the what happens is there's still possible litigation on our end, but as of now, find something to knock on. We have not been liable other than our initial capital inputs. And so, that's different than any other business, Dave, as you know, and why I got into multifamily to begin with because of the non-recourse loan. So, and the other side of it is to stay in touch with your investors. Stay in touch.
I was going to ask about that. So how's that played out? Because that's a very difficult situation to go through with your investors.
Yeah. So, I tell though, there's different kinds of communication and, what you're comfortable with. So on the LP side, I had a capital call, and I remember the general partners called like a month before and said, "Hey, we're going to have a capital call." I'm like, "What?" There was no leeway into this. Mm-hmm. Conversely, we foresaw this problem that occurred in March. The note actually came up for extension in March of 25. So as early as January 2024, we had been signaling, we've been trying to talk to the lender, though they wouldn't talk to us, and signaling to our investors that this was going to happen. We were going to have a capital call. We just didn't know as much yet or what the specific terms would be. That we had turned around the operations on it. The property was stellar in terms of operations. But when it came down to it, the lender wanted, the only option they gave us was to pay off the note or pay it down significantly, like $2.5–3 million worth. And nobody's going to put that kind of money into it, including myself. So that's another positive, is to stay in touch with your investors and let them know the progress. Sure.
Don't wait till the last minute and spring a surprise on them.
Yeah.
They knew over a year ahead of time what was going to be happening.
Hey there, if you're a capital raiser, a syndicator, or a fund manager, and you're looking for a steady flow of incoming accredited investor leads, then go ahead, grab a free copy of my new book, How to Get 20 Accredited Investor Meetings Every Month Without Cold Calling, Networking, or Chasing People. You can get that at 20accreditedinvestorsbook.com. Again, that's the number 20accreditedinvestorsbook.com.
It's easily forecastable in that situation for us. But, so there's some of them that are very angry with me. Mm-hmm. I know they'll never invest with me again. And others of them I know that say, "Hey, you can't hit home runs all the time." These things happen. And the things I tell investors, I said, "I don't know about you guys, but how much money have we lost in the stock market over the years in your 401ks? You didn't stop putting money back in your 401ks because you lost some money." So stay in the game, be persistent stay in the game, be persistent. You can't expect people to love you for losing their money, but you can. I take them to coffee and take them to lunch, and I lost right beside you.
Yeah.
I lost more than you lost. So,
yeah,
but that's not comforting, obviously, but.
At least they knew you had some skin in the game for sure. So that makes a difference.
Yeah, it's important to let investors know that, as I said when we got into this, my skin is in the game too, and I'm there with you. So
yeah,
we win or we lose together. And but I think the introspection on this has really been you lay awake many nights trying to figure out how you can manipulate the loan, how you can make it happen. But then when you realize it's inevitable and it's going to happen, you have to just kind of accept fate and say, there was almost a sense of relief when it happened, because we had worked 3 years to turn this around, and we had spent enormous amounts of hours. Never took a dime out of the property. General partners never took a dime out of it. So worked for free for 3 years, but. A lot of lessons, a lot of good and bad lessons learned there. And
I'm glad you got some good out of it as well, not just the bad. So I appreciate the outlook that you have. So now that we're kind of at the time we're recording this, we're on the cusp of a brand new year. Where do you see yourself going in 2026?
Great question. And I think like everybody, for me, it's personally a time of pause. It's not a time of, I'm not getting out of the market. I'm still going to do this. I still like multifamily. I still like real estate, but it's kind of, I'm trying to do a couple different projects. I have a son-in-law that wants to flip houses. And so, going back to the roots is kind of, you said, working with him and coaching him on how to do it and what to do it. I have no desire of pounding nails and doing stuff like that, but, and he's in a different marketplace than I am, but working with him said, I'll finance it if you find the place. And so bringing him up to speed and giving him the templates and the tools and some of the contacts. And, the other one I've thought about, I've had a friend here in Houston that's been very successful with building duplexes and selling them. And he's started out with 1s and 2s, and now he's building communities of duplexes. If you think about it, put up 10 duplexes in a row, there's 40 units right there. And you either sell them off to an investor, or you sell them off one at a time, or you rent them. So there's multiple exit strategies. Still playing with that one, but recently I'm really engaged on building a not small, 94 unit building in a tertiary market, not Houston, but tertiary outside of Houston. Yeah. I have a developer friend that has asked me to come alongside of him. He does the development work. He doesn't want to do the leasing and the asset management. And I'm trying to go after HUD financing. That's a much longer term, we know, and a runway. So that's kind of the value I'm bringing to the project, and looking forward to really understanding the construction side better.
Exciting.
So
yeah. So it's taking a pause on certain things, but going full steam ahead on others.
And, I think I left the corporate world 2 years ago, and people have asked me, well, why are you doing this? Why don't you just go play golf or something? I said, I heard, it's not original with me, but high energy, low IQ. So there's still energy left in me to do this stuff. And as long as I've got the energy, I think I'm going to do it. And so that's the bottom line.
Well, I might swipe that from you that you swiped from somebody else.
Feel free. High energy, low IQ.
I think that applies to a lot of us, my friend. So Randy, hey, as we wrap it up, if people want to connect with you, what should they do? Where should they go?
Well, David, again, thanks so much. Easiest way to get a hold of me is go to the webpage. The name of the company is InvestArc, but the webpage is invest-arc, A-R-K, invest-ark.com. There's a contact me on there. I'd love to chat with you. I'm all the social medias, LinkedIn, Facebook too, readily identifiable. I'd love to chat with anybody.
Awesome, Randy. Hey, thanks so much for being on the show. And everybody, thanks for tuning in. We'll see you on the next one.
Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.